Assalamualaikum warahmatullahi wabarakatuh. Today we're gonna discuss October 2018 question 2 FAR320. Let's go. Okay. For question 2, A. Explain briefly two characteristic of intangible asset. This you guys need to memorize. Control. First, control. The explanation is can gain benefit from the asset and also stop others from getting the benefit. You need to explain the characteristic, otherwise you can't get the marks. So for the second characteristic is identifiable. The explanation is can be separated from the entity. Okay, this all for A. Next question, B. On 1st July 2015, World Change Berhad acquired a franchise at a cost of 500,000 ringgit. The franchise had an indefinite useful life. So, if the question said that the franchise had indefinite useful life, so there is no amortization. So back to the question. On 1st July, on 1st July 2017, the fair value of the franchise was 450,000 ringgit and identified that the economic life has been limited to only 9 years. So there is useful life. Then this has amortization. Okay, so the intangible asset is measured using revaluation model. So the first question is explain the accounting treatment for the franchise on the year ended 30 June 2016 and 30 June 2018. Okay, so the answer is for the year 30 June 2016, the franchise will be recognized as intangible asset at a cost of 500 with no amortization, as it indefinite useful life. So we will be recognized as intangible asset because the franchise is in intangible asset, which at the cost of 500. The question has given 500k with no amortization, as we discussed just now, because it has indefinite useful life. Okay, for the 30 June 2018. Okay, for the 30 June 2018, the franchise will be written down to 450,000 with deficit of 50,000 ringgit on 1st July 2017. This is because when the fair value has become 450,000, so we need to the cost, we need to subtract the fair value, then we will get the deficit. So 500,000 subtract by 450,000, then we will get 50,000, which is will be written down as deficit. So okay, continue. Since there is a useful life of 9 years, there will be amortization of the franchise. So we have discussed just now, when there is useful life of 9 years. So when the question said there is useful life, so there will be amortization, which is 50,000. How do we get the 50,000? So the fair value, which is 450,000, divided by 9 years. So we will get the amortization. So that's all for question 1. So you will get the 2 marks. Okay, next question. Okay, show the journal entry to record the transaction for the year ended 30 June 2018. Okay, we need to refer back to the answer 1B. So the first one we have to record is the deficit. Okay, the deficit is 50,000. So we need to debit the deficit, which is 50,000. So credit what? Credit franchise, because we need to subtract the cost. So we need to stay at credit. So the first accounting treatment, the journal entry, debit deficit, then credit franchise, 50,000, because the deficit was written down 50,000. Okay, the second one, super amortization, and then credit accumulated amortization, which also 50,000, because we need to take this 50,000. Okay, we need to return in super amortization, credit, then debit, then credit accumulated amortization, which also 50,000. So that's all. Then you will get 4 marks. You need to do this. The question is not so hard. So that's all for A and B. Thank you.
The question 2 part C, the question asks us to compute or calculate the amount of intangible asset as of 31 March 2018. In the sentence given here, we can identify the intangible asset, which is the development cost 500,000, and the patent, which is 120,000. So the calculation here is development cost plus with patent, which is 500,000, plus with 120,000, and we get RM 620,000. Okay, move on to the next question. The next question asks us to prepare the extract of statement of profit or loss and statement of financial position as at 31 March and 2018. So first we prepare the extract of statement of profit or loss as shown here. So the statement of profit or loss for the year ended, we do the both here, which is 31/3/2017 and the 31/3/2018. So we here there is the research cost. We can, where we find the research cost, we can look at the question. The research cost for the first year is RM 300 and 300,000, and the research cost for the second year is RM 100,000. So the statement of profit or loss extract should be look like this: expenses, research cost for the first first year 300,000 and for second year 100,000. And the next the question asks us to prepare the statement of financial position. When we look at the question, we know that the non-current asset, the development cost and the patent is the non-current asset. So at the second year, at the last year 31/3/2018, the transaction happened and the development cost should be 500,000 and patent should be 122,000.
All you have to do